CBDCs Explained. Episode 5. The Future of CBDCs, What Comes Next? What if, in just 5 years, your paycheck, your savings, and even your mortgage ran entirely on government-issued digital money? No cash, no plastic, no waiting days for transfers. That's the world central banks are quietly building right now, and the race to launch digital currencies is accelerating faster than anyone predicted. This is the final chapter of our CBDC series, and today we'll explore what comes next. As of 2025, over 130 countries, representing more than 98% of global GDP, are exploring or developing central bank digital currencies. 11, including the Bahamas, Nigeria, Jamaica, and China, already have one in circulation. The European Union, India, and Brazil are running major pilots. The United States and United Kingdom are still evaluating their next moves. The direction is clear. The world's financial system is shifting from paper money to programmable money. In China, the digital yuan has processed billions in real retail transactions. In India, the digital rupee pilot now connects directly with the national payment backbone, UPI, and is expanding to more banks each month. And in the EU, the digital euro is moving toward legislative approval, targeting a public rollout around 2028. Why governments are racing? CBDCs promise more than just convenience. They're about control, efficiency, and inclusion. For central banks, a digital currency means instant monetary policy. They could distribute stimulus directly to citizens or adjust interest rates digitally. For economies, it means faster, cheaper cross-border payments. Today, international transfers can take days and cost up to 6% in fees. CBDCs could bring that down to seconds at near zero cost. And for citizens, especially in developing nations, CBDCs could open the door to financial inclusion, giving millions access to safe, state-backed money for the first time, no bank account required. That's the optimistic view. But there's also a warning: whoever controls the rails of digital money controls the flow of the economy. Cross-border experiments. Some of the most advanced CBDC tests are happening not in theory but in real time. In Project mBridge, a collaboration between the central banks of China, Hong Kong, Thailand, and the UAE, cross-border transactions using digital currencies were executed in seconds, cutting costs by more than 90%. Project Icebreaker, led by the Bank of Israel, Bank of Norway, and Sveriges Riksbank, successfully linked different national CBDCs through a single hub, allowing payments between countries with minimal friction. These pilots hint at the future of instant international settlement, one where CBDCs could replace the traditional SWIFT network for some transactions. If scaled globally, they could completely reshape how trade, remittances, and global finance operate. The human side: trust, privacy, and choice. Technology aside, the biggest challenge is trust. People trust cash because it's anonymous. They trust banks because they act as intermediaries. But will they trust a government-issued digital wallet? In Europe, the ECB is designing privacy layers so small payments remain confidential. In China, the digital yuan includes controlled anonymity, meaning transactions can be tracked for crime prevention but not for personal surveillance, according to official statements. Still, skepticism remains. Critics fear that programmable money could allow authorities to limit how or where money is spent, or even impose expiration dates on stimulus funds. Supporters counter that every major technology shift, from credit cards to mobile banking, faced the same fears before becoming normal. Ultimately, the question is not whether CBDCs will exist but what kind of system we choose to build, one that empowers citizens, or one that just digitizes control. Looking ahead. So, what comes next? Expect more pilots, cross-border integrations, and public debates. Expect countries to collaborate and compete over who defines the standards. And most importantly, expect digital money to become invisible and woven into your daily life, just like the internet did 20 years ago. CBDCs are not the end of money. They're the next evolution of it. And as the lines blur between traditional finance and fintech, a new wave is rising: neobanking and digital banking. That's our next series, where we'll explore how challenger banks, open finance, and AI-driven banking are rewriting the rules of money in real time. Subscribe now and join the journey. Stay tuned, the fast evolution of digital finance is only getting started.